Furious at the looming economic storm, we delve into the dire warnings of prominent economist Peter Schiff. Brace yourselves, folks, because the U.S. economy is teetering on the edge, and the alarms are deafening. Schiff's relentless concerns are like a relentless drumbeat of impending doom. You see, the recent debt ceiling deal may look like a temporary fix, but according to Schiff, it's just another chapter in the saga of reckless government spending and borrowing. This, my friends, is setting the stage for a catastrophe of epic proportions. While the deal boasts about saving approximately $1.5 trillion over a decade, Schiff reminds us that it's just a drop in the bucket compared to the projected deficits. The national debt, he warns, is on the brink of spiraling out of control. But that's not all. Schiff's consistent warnings ring alarm bells about the perils of raising the debt ceiling without making substantial cuts to government spending. He foresees a future where we face two grim choices: an honest default where bondholders go unpaid or a dishonest default where inflation is used to fulfill obligations. It's like being caught between a rock and a hard place. And here's the kicker: Schiff predicts the loss of reserve currency status for the US dollar. He's advocating for divestment from the currency, and that's a seismic shift in the financial landscape. This alone should send shivers down your spine. Now, let's get into the nitty-gritty. Schiff believes that the root cause of the inflation we're experiencing today can be traced back to the 2008 financial crisis. The government's response to that crisis, including quantitative easing, QE, measures like QE1, QE2, and QE3, coupled with the pandemic-related actions, are the sources of our current inflation nightmare. And brace yourselves, because it's only going to get worse as long as we keep running massive deficits. We're talking about a $2 trillion annual deficit, and it's rising like a tidal wave. Schiff firmly believes that the decline in the Consumer Price Index, CPI, is a thing of the past. We bottomed out at 3% year over year, and now we're at 3.7% and rising. 2024 might see inflation as a much bigger problem than it was in 2023. Now, as if that's not enough to keep you awake at night, rising interest rates are becoming a real menace. It's not just about the rates themselves, it's how they affect businesses. Companies borrow money to expand, make capital investments, and do what they do. But as interest rates rise, so do the costs of servicing that debt. And guess what? Those costs get passed on to consumers in the form of higher prices. It's a vicious cycle, my friends. And here's the grand finale: gold, the ultimate threat to the dollar. According to Schiff, gold is poised to reclaim its position as the primary monetary reserve asset. It's like history coming full circle. The dollar supplanted gold because it was backed by gold. But now, it's just a piece of paper, and the world is looking for alternatives. Gold, with its intrinsic value, might just be the answer. But this isn't just a financial shift, it's a tectonic plate shift in the global economy. The U.S. has enjoyed the privilege of being the creator of the rules as the world's reserve currency. But as the world diversifies away from the dollar, our artificial economy built on that privilege is in danger of collapsing. In this precarious financial landscape, one thing is certain: the American economy is navigating treacherous waters. Inflation is like a relentless storm, and the national debt is a mountain we can't ignore. The challenge now is to steer towards a more secure and prosperous future. It's a crossroads where economic stewardship and prudent fiscal management are our only lifelines. So, folks, keep your eyes wide open, because the story isn't over. The warnings are real, the challenges are immense, and the stakes are higher than ever. Peter Schiff's insights are a call to action. It's time to be vigilant, stay informed, and prepare for the economic shifts ahead. And remember, if you want to stay ahead of the curve, like and subscribe to our channel now.